Good morning, everyone, and welcome to NYSE Live. I'm Kristen Scholler here in studio at the New York Stock Exchange. Well, equities remain choppy as the conflict in the Middle East continues. The International Energy Agency is proposing the biggest in history release of emergency oil reserves, according to a report early Wednesday, citing a source familiar with the matter. That could come as soon as today. Well, U.S. Treasuries were mixed heading into the February consumer inflation report. And here's what's on tap this hour. We'll talk more about that consumer price index data for February. It came out at 8:30 a.m. Eastern, and a stock market expert, you know him well, Jay Woods, is going to break down what it means for borrowing costs and your investments. Plus, Inc. yesterday unveiled its 2026 Female Founders 500 list. Editorial director Bonnie Ghosh will tell us who topped the group and how this group of women came together. Then wealth management platform Altruist is diving into AI with a new tool for advisors. Its chief operating officer, Mazi Bahadori, shared more with our Ashley Mastronardi. Now, before we bring in our first guest, let's take a look at how the data shook out for February when it comes to consumer inflation. From the same time a year ago, headline CPI was 2.4%. That was in line with what economists expected. That means prices were up 2.4% from the same time a year ago. Core CPI, which strips out those volatile food and energy costs, rose 2.5%, also in line with economists' expectations. Well, this data notably doesn't include March prices at the pump, which have adjusted amid the ongoing conflict in the Middle East. Joining me now to talk more about the data as well as the ongoing conflict and the impact here at home is Jay Woods, Chief Market Strategist at Freedom Capital Markets. Jay, great to see you this morning.
Great to be here.
Let's start with these CPI figures, your takeaway.
Yeah, they came in line, as you just said, and that was the key. Anything a little hotter, given the backdrop of what's going on in the Middle East and higher energy prices, that would have spooked this market a little bit because we expect, that core reading that headline reading to go a little higher next time they report, because guess what? Gas prices are up 56 cents on average across the board, and that is the highest tax on the consumer, those higher energy and gas prices. So we kind of just dodged a bullet, in my opinion, and then we'll see what the PCE comes in on Friday. PCE now takes more into account healthcare costs than shelter costs. CPI is more shelter. The good news on the CPI is we still have, shelter housing prices that have remained stable and starting to tick lower. That will help the CPI going forward. But all eyes are on what's going on in the Middle East. That's dictating everything we see here at the market.
Of course, the PCE data is the Fed's so-called preferred inflation gauge. We are going to get a meeting from the Federal Reserve and a decision on interest rates next week. How does this factor into that?
All right, the penultimate meeting for Mr. Powell. He's got 2 meetings left. How does it factor in? It won't factor into their decision. They're not going to cut rates. We know that. What they're going to do is tell us what the direction is going forward. We're going to have a new Fed chair 2 meetings from now. Probably Kevin Warsh. We'll see how that goes. But watch the dots. This is one of those quarterly meetings where we see the dot plot, which means every Fed official, voting and non-voting, say where they see rates over at the end of this year, 2026, and the next 3 years. Those dots, for 2026 were pretty widespread as we entered the year. Let's see if it narrows. The average consensus was for 1 or 2 cuts for this year. We're not going to get one yet going into March. So let's see if the dots tell us a different story than what we think is going to happen, which is probably 2 cuts by the end of the year once we get a new Fed chair in there.
So as we talk about the ongoing conflict in the Middle East, we see oil prices still choppy. ICE Brent crude oil, as we're speaking, above $90 a barrel. Obviously, equity markets are choppy as well. But it's interesting because the S&P hasn't dropped more than about 5% from its record. What does that say about the potential resiliency?
Yeah, resiliency is the word. The market's been extremely resilient. It's bending, not breaking. And I thought maybe Monday would be the day we broke when energy costs went sky high and the market was selling off. But what this market has done, up until Friday, 13 of 14 days where we've traded lower, we've actually closed above the midpoint of that range. Friday, we did close on the low, but then Monday, Tuesday, the last 2 days, we sold off, we rallied, we closed higher yesterday in the NASDAQ by a point and then slightly lower in the other indexes. So every time there's a dip, buyers are stepping in. Volatility spiked above 30. Every time volatility spikes above 30, it generally rallies back a year later. COVID, the only time it didn't, we didn't see that, or weeks later, I apologize. And what we want to see is, this find the floor, and every time we go lower, we find a new level. So I'm watching 65, 65.86 now, 65.91, the 200-day moving average. That continues to rise. We have a ceiling in this market. The ceiling seems to be shrinking. It was 7,000, the old high. Now it's 6,900. The floor is rising with that 200-day moving average. Watch those October, November lows. If we break that 65.40, to see what happens in this market. But as you said, we're down 5% intraday, and that is the lowest drawdown from a high with the VIX over 30 ever. So this market resilient continues to be the key. Can we stay resilient? Hopefully technology helps us, and maybe Oracle will be the beginning of a new trend. We'll see.
I'm glad that you brought that up. So let's pivot to that, because we do see Oracle shares up about 9.5% pre-market after its results. What does this mean for the AI trade?
Well, it's a sigh of relief more than anything. Oracle has been down over 50% from its peak. AI, the AI story, the fact that AI is disrupting AI, very ironic, but that is what has been happening the first 2 months of the year. Oracle, Adobe, which reports on Thursday, and Salesforce have been the three primary software companies where we've seen that AI disruption. Oracle is still in a really bad downtrend. This 10% rally, let's watch 168, the declining 50-day moving average. Let's see how it closes. We've seen a lot of these stocks have great earnings. I'll give you Meta, I'll give you NVIDIA, I'll give you Broadcom, where they've rallied on the news and they were never able to follow through. So I want to see price action into today's close. I want to see price action over the next 2 or 3 days when it comes to Oracle to say, okay, maybe the worst is over and we can resume going back higher. So Oracle, great start, but let's see how it finishes today and over the rest of the week.
We talk about this being a headline-driven market. That was certainly the case in 2025, or at the start of 2026. It's very similar in terms of the story as it's unfolding. Yep. But we did hear from the president earlier this week on Monday indicating that this war in Iran could end sooner than expected. Does that mean that maybe the low is behind us?
If that is the case, that the worst is behind us and it can end sooner than expected, then yes, I think the lows may be in. But this continues to be a volatile situation. The Strait of Hormuz is what everyone's an expert on now, including me, of course, as I'm about to talk about it. But we're watching, traders are watching that. We had a tweet yesterday. You talk about real-time volatility. The Department of Energy Secretary tweeted out that U.S. naval ships are escorting cargoes through the Strait of Hormuz. And then that was taken down 20 minutes later, and now there's a fear of landmines going into sea mines. They wouldn't be on land if they're in the Strait, but there are mines in the Gulf there. So if there's disruption in the Strait, that will disrupt the flow of oil. That will lead to higher for longer, which will not be good for the American consumer, not good for the economy. So you have to watch the headlines that come out, and they are fast and furious. The president, he said something to CBS at 3 o'clock, and we rallied on Monday on that news. So we'd like a little more definitive, concrete timetable and game plan. So each headline is going to move this market. I expect it to be that way for the next week or two, or for 2 weeks, to quote the president. In 2 weeks, we'll revisit it. We'll see.
A lot of action down here on the trading floor. As always, Jay Woods, Chief Market Strategist at Freedom Capital Markets. Thank you as always for joining.
Thank you. Appreciate it.
All right, everyone, will stay with us, because up next, Inc.'s editorial director Bonnie Ghosh is going to join me in studio to talk its 2026 Female Founders 500 list. Amid Women's History Month, you are not going to want to miss it.
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live. As Women's History Month continues, the NYSE has been highlighting some of the fiercest forces in business, from Paris Hilton to Martha Stewart. And just recently, Inc. launched its annual Female Founders list, and it too is something to celebrate. This list highlights household names like Kim Kardashian and Kendra Scott. And joining me now with more is Bonnie Ghosh. She's editorial director at Inc. Bonnie, welcome.
Thank you. It's so good to join you.
Congratulations.
It's a big week. It's a very big
Yes.
week at Inc. magazine, and this is like a passion project for all of us. We launched this list back in 2018, and it's evolved into the Inc. Female Founders 500. It initially started as 100.
500
Yes.
female founders are on this list. Is that right?
Yep.
Amazing.
And it's a nice crop between companies that are well known. As you mentioned, Kim Kardashian, Skims, Kendra Scott. We also had Alex Cooper's Unwell brand. Call her daddy, that Alex Cooper. She launched a beverage brand. But then it also has a lot of really great, impactful female founders that you may not have heard of, like our cover star, which is the Kalshi founder, Luana Lopez Lara. So, her story is really interesting because Kalshi has now built quietly a $11 billion powerhouse of a predictions market platform, and which you've, I'm sure, seen quite a bit in the news recently. And that story dives into like her journey between coming from being a ballerina at MIT and then really fighting to get regulatory permissions through for the predictions market platform.
We're showing our viewers that magazine cover right now. It's absolutely incredible. What's the methodology that goes into putting this list together?
So it's a combination of different things, right? Some of it's metrics based. If they've had a really great growth trajectory in the last year, revenue growth, if they've had a really amazing brand campaign that's been really impactful, that's been able to get their brand out there, if their founder has a really unique backstory, whether or not they've had AI implementation strategy that has been really clever to scale their company. So there's a number of different factors that go into why we would consider a female founder on this list, but ultimately they have to prove excellence over the last year.
What do you think this says about the state of business, that these women, these 500 women, are out there making change?
Well, what's interesting about this particular list, right, is that collectively there has been $12.3 billion generated from these companies in the last year alone, and $12.2 billion of funding. And that is amidst funding inefficiencies in terms of like there not being just enough VC funding going towards these companies. So they are cleverly bootstrapping many of these companies in order to scale and grow. So those are kind of the interesting, impactful ways in which female founders, even though they are up against some economic uncertainties, they're up against funding challenges, they're still able to scale and grow in really clever and unique ways.
You know, it's interesting just connecting the female founder, of course, to the New York Stock Exchange, right? These visionaries, obviously, they start these companies. They seem to be very dedicated and passionate about what they're building. And then ultimately they can actually go public here at the New York Stock Exchange. Was that a common thread that you found throughout the 500 women that you spoke to or named to this list, that, you know, it did take a lot of passion and it will take that passion to continue to grow?
I think the one underlying theme we've seen, of course, the concept of going public is always a goal. This is the first year that we've actually opened up to the public sector as well, and as well as international companies. So, you know, I think that goals for each individual company are different. The founders of Phase It, which is a glitter freckle company that created an entire product line of its own in a very crowded beauty industry, you know, their goal as of right now is just to scale really aggressively. Initially, they started with $200,000 and have now are generating $40 million in revenue, and now are in every CVS and beauty store. And their initial goal, honestly, right now is just to be able to capture that magic that they've had and be able to scale even further. So some of the companies, yes, there's an AI company that we've profiled, Ryder, where they are particularly scaling in a really clever way. They launched during pandemic. They stalled out a bit, and but instead pivoted to being able to offer their platform to enterprises, and now have grown that company into a $1.9 billion company. So I think that the common thread here is that they have a passion behind their ideas and figuring out really clever ways to execute those ideas amidst like a really challenging market right now.
What is next in store to celebrate these 500 women at Inc.?
Well, we are going to be launching our Inc. Founders House event at South by Southwest. And in addition to the launch that we had of the list, we will be holding a female founders meetup there, a female founders panel. So, you know, at Inc., our biggest goal is to be able to share strategies and insights for businesses and founders to be able to learn from each other and be able to like capitalize on successes that their other cohorts have had to be able to scale and grow their companies.
Bonnie Ghosh, congratulations to you and to Inc. Bonnie's editorial director at Inc. We appreciate it, of course, you highlighting these female founders.
Thank you for having me.
Yep. All right, everyone, will stay with us because on the other side of this break, Altruist is going to speak to its new AI tool. It's meant to improve wealth management, and its COO will have more on the other side.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Wealth management platform Altruist recently made waves when it debuted a new AI tool. It's called Hazel, and it's intended to support the day-to-day work of financial advisors. Altruist COO sat down with Ashley Mastronardi for more. Let's take a look.
So Hazel is our AI solution that's fully integrated into the platform. Hazel basically functions like a basically superhuman employee on your team, knows everything, has all of the data, has the ability to be queried, and can pretty much do anything that an advisor needs. If you think about what Altruist does, from the very beginning, we've been focused on eliminating friction in advisor workflows. So everything that advisors have to do, like opening accounts, funding accounts, trading those accounts, rebalancing, billing, client portal access, all of those things. With Hazel now, we go from having to reduce that friction to really fully eliminating that friction. And the tax planning tool is just one more feature of that, focus really on providing kind of tax planning and tips for investors, clients of those financial advisors.
What are the capabilities of this tax planning AI, and who is actually using it?
Hazel's AI tax mode. What that does is any advisor can upload client tax documents into the tool. So it'll upload 1099s, W-2s, K-1s, 1040s, et cetera. The software will then ingest all of those tools and provide tax guidance and tips for those clients. And so it's not technically giving tax advice, but it's producing these beautifully curated and crafted reports that advisors can then take and share with their clients and provide really good, insightful tips on where they could potentially be saving more to generate more tax alpha.
What impact do you think this technology is going to have on the tax planning space?
I mean, I think it's pretty tremendous. If you think about where advisors tend to spend a lot of their time and energy, things like if you wanted to provide some sort of tax guidance to your clients, you previously would have had to have tasked a back office team, collected all that paperwork, sat down, come up with a game plan, who's going to do what, what's our strategy going to be, how are we going to divide up this work, create all of that content, produce a hopefully nicely curated report that could then be shared back with the client. With Altruist now and with Hazel's tax mode, all of that completely changes. The advisor can simply upload those documents into Hazel, query Hazel to say, here's what I'm looking for, go make a cup of coffee. By the time the advisor comes back, a beautifully curated report is ready. So we think that this software is going to be incredibly disruptive to current tools that exist and to the industry at large.
I know the software just launched, but what is some of the feedback that you've been getting?
Feedback's been tremendous. I mean, both from the market, from our customers, from investors. If you look at sort of within days of launch, about $120 billion of market value shifted across 4 continents in wealth management equities. I mean, that was absolutely massive. I think a lot of that is because of the fact that, there's a lot of AI tools out there. There's many tools for wealth management. Hazel, in particular, being built on top of Altruist, it's the first ever fully integrated AI tool for a custodian. And when the industry sees this, they get just tremendously excited by the potential that has. The fact that this is actually truly disruptive. It's not just another sort of software that integrates with another custodian. If you think about sort of what the genesis of that is, like why people get really excited by that, it's the fact that, if you compare kind of Altruist to some of the legacy firms, it's like a full self-driving car compared to horse and buggy. You could layer on whatever software you want on top of it, but still not going to get you very far. The self-driving car, however, far more efficient, far more cost-effective, just a far better experience overall. And so the feedback that we're getting is people are just tremendously excited for it.
And what does the name Altruist mean, and how does it play into your brand's mission?
Altruist, I mean, there's different ways you could kind of look at it. We like to take the definition of it's really acting selflessly for others. Our founder and CEO, Jason Wank, when he was setting out to create the company, set out a mission of we want to make financial advice better, more affordable, and accessible to everyone. And we thought, what better word to capture that, the spirit of what we're trying to build, than Altruist.
All right. And what is next for Altruist?
For 7 years now, we've been very much heads down building. We've been super focused on eliminating friction across those advisor workflows. Hazel, of course, is a really exciting launch for us. But when we think about what's next, we release new features every other week. So 26 times a year, there's new tools that we're putting into the hands of our customers. If you think about what the platform will look like in a year relative to what it is today, it's going to be completely different. There's going to be like hundreds of new things that you can do on Altruist that you couldn't do today. Insofar as where that puts us in the market and kind of what's next more broadly, it's in 5 years, this is going to be a $20 trillion industry of assets that RIAs will need to look after and will need to partner with a custodian. And we think that we can play a very meaningful part of that growth going forward.
And given the momentum that AI has in the markets now, do you think there's a ceiling or any limit to the amount of tools that Altruist can roll out?
I don't think there's a limit. I think it's more a function of if you look at what a financial advisor, any RIA in this country needs to do on a day-to-day basis, there's anywhere from 30 to 40 things on his or her plate. And with Altruist, we can get that down to probably 2 or 3 in the next few years. That all the advisors are focused on is just exclusively servicing their clients or going out there and growing their practice. And advisors get to choose what they want to do. Do they want to just focus on their existing clients? Do they want to continue to grow their practice? Or do they just want to take more time, maybe spend it with their family, kids, whatever it might be? So for us, it's not so much that there's a cap of like what the potential is, but much more of how much friction can we possibly eliminate to basically turn advisors into superhumans that really don't have to worry about any back office functions or administration and can just go out there and be very, very client-centric.
All right, thanks again to Altruist COO Mazi Bahadouri and Ashley Masternardi for that interview. Well, stay with us because up next, we're preparing for United States Antimony to ring at the opening bell. You're taking a live look at that opening bell podium, and we will take you there after this short break.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it, because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream, and that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. United States Antimony is set to ring today's opening bell, here to celebrate its NYSE listing after previously trading on NYSE American. Viewers can follow it at the ticker symbol UAMY. And after ringing today's opening bell, its chairman and CEO Gary Evans is going to join us live on the trading floor. He'll speak to the role that antimony plays in the U.S. defense sector, including with modern military applications. This company also recently announced a joint venture with America's Gold and Silver, aiming to rebuild critical minerals capacity here in America. Antimony is based in Dallas. It dual lists on our exchange NYSE Texas. And Lance Glynn is going to interview Evans after the bell, diving into the company's priorities. They include diversifying into other critical minerals and expanding operations. We're taking a live look at that opening bell podium, and let's listen in as the market gets underway. Packed podium there to celebrate the market open, and U.S. Antimony now, of course, listed on the NYSE. Again, we'll be joined by them on the trading floor in just a few moments. First, though, let's talk these markets and how we opened. We do see equities remaining choppy, of course, amid this ongoing conflict in the Middle East, and we'll wait to see how energy prices shake out. But currently, as we speak, ICE Brent crude oil trading at about $91 a barrel. Joining me now with more is Michael Scordelis. He's the head of U.S. economics at Truist. Mike, welcome.
Thank you for having.
Yeah, great to have you on the show this morning. And let's start with these inflation numbers. As an economist here, what do you make of today's data?
Well, first of all, it's backward looking. So it's all about pre-Iran conflict. So there's that to understand it. But it was benign, and I think that was a bit of a surprise for some people. We kind of expected it, but all told, pretty benign.
Okay, so in terms of what we can expect going forward, we've seen adjustments, prices at the pump change, right, in the wake of this ongoing conflict. How does this set us up for March data?
Yeah, March data, especially inflation related, is going to be, it's going to see a big spike up. So regardless of we've come off the peak levels, as you mentioned, we're still in the 90s as far as crude oil prices. There's been a dramatic increase at the pump for consumers and for diesel prices, so businesses are feeling it as well.
Yeah.
So we're going to see that bleed through into consumer inflation and wholesale inflation in the March readings.
We will get another read on inflation, again, backward-looking data, but certainly data that is important. It's the Fed's preferred inflation gauge. That's the Personal Consumption Expenditures Index, and that's before the Fed meets next week to decide its next path forward on interest rates. What does this mean for the Fed as it meets next week?
Well, for the most part, I think they're going to look through some of the current events, but most of this backward-looking data has been rather benign. So on the inflation side, it looks like no reason to be concerned. On the other hand, there's the inflation or the labor side of the mandate, and we are seeing a bunch of choppiness. Last 9 months, we've seen up and down kind of sawtooth, flipping back and forth between gains and losses per month. The Fed's going to have to deal with it. And I think if we didn't have the Iran situation going on, there's probably a likelihood that they would be cutting sooner rather than later.
Interesting. Now, do you agree with this notion, what some have called a K-shaped economy, right? That we are seeing a bifurcation in terms of the overall growth?
There is, but I push back a little bit on the notion of K because it makes it sound like that lower portion of the K, that low-end consumers, that spending's going down. It's not going down. It's just growing at two different speeds. The high-end consumer, much more robust, growing at a much faster pace. But low-end consumers, spending is increasing, just not nearly keeping up with what the high-end is doing.
You know, the tariff story isn't getting much attention right now just because it is such a headline-driven market. We have data like we had CPI this morning, but we also have real-time updates quite frequently on the situation in the Middle East and what that means for oil prices. I do want to ask you where things stand with tariffs as it relates to the economy.
Yeah, so tariffs are a big deal, especially for those import-dominated categories. Think things like furniture and bedding, those sorts of things. Even today's numbers, we're seeing a kick up, and it's been multiple months. It isn't just 1 month. It wasn't, certainly the Iran-related stories. They're starting to pass through tariffs. That's the bad news. The good news is that import-dominated categories within overall goods is relatively small for the overall economy, and that obviously, as we've seen through the balance of 2025 and here into 2026, is that the economy is able to absorb those increases. Nobody likes it. It's absolutely, certainly it's higher prices, but the economy is able to absorb it. That's the good news.
Yeah. Do you foresee higher oil prices?
Yeah, in the near term, certainly. We're going to need to get past that. But that's, if we're measuring it, the Iran situation in weeks rather than months, again, I think the economy is going to be able to absorb it. If we start measuring it in months, that's going to be a problem, especially for these shippers. And again, import-dominated categories that shipping costs are going to increase dramatically. And avoiding the Middle East and some of these other areas as far as shipping lanes, that's going to push up costs. And it's really an inopportune time for consumers and businesses.
Mike, we'll have to leave it there. Thank you so much for joining. It's great to see you. That's Mike Scardellis. He's the head of U.S. economics at Truist. We appreciate it.
You're very welcome. Thank you.
All right, everyone, still to come. We will continue to follow these headlines, and we'll also head down to the trading floor where our Lance Glynn is standing by for an interview with U.S. Antimony after it rang the opening bell. Its CEO, Gary Evans, is going to share more about its work in the defense sector. Plus, the Harlem Globetrotters are celebrating their 100th season, and their president is going to talk to their goals ahead, including getting into gaming. Pretty cool stuff. Then we'll learn more about the impact of Paris Hilton. This icon is emerging as an activist and an entrepreneur through her company, 1111 Media. She was on site here at the Exchange on Monday to mark International Women's Day. Stay with us.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. You just watched U.S. Antimony on the podium ringing the opening bell to mark the start of equities trade. And now I do want to head down to the trading floor where our Lance Glynn is standing by with the company's chairman and CEO, Gary Evans. Lance, good morning.
Kristen, good morning to you. That's right, U.S. Antimony is fresh off ringing the bell, and Gary Evans is here with me to talk more about it. Gary, first and foremost, congratulations on ringing the bell. What was it like, the experience of it all, coming to New York City, being up on that podium behind us? Just talk to us more about the experience overall.
Well, the New York Stock Exchange does a fantastic job of making companies feel special, and having some of our employees, our directors, and family members here. It was a great experience, and it makes us feel like we've accomplished something, and we have more to come.
So U.S. Antimony, or antimony itself, right, we know it's so critical because of its defense applications, right? But for viewers who may not be familiar, because I don't have to tell you this, not everyone has antimony on the mind 24/7, but for those who may not be so familiar with it, why is it so vital to military applications?
Well, I mean, there's no doubt that 99% of the population has no idea what antimony is. This is what an antimony ingot looks like. This is a 5-pound ingot. We make them in 50-pound sizes for the U.S. military. So it's used as a stockpile for big companies like Northland, like Raytheon, like Boeing, GM, where they make products for the U.S. military. So today, you can't fire a bullet in the world without antimony. It's a hardening material for lead. It's also used in the ignition system for primers, laser-guided missiles, night vision cameras, binoculars. The fire retardants on tents is antimony. It's an antimony trisulfide. Your battery in your car, a lead-based battery, is water, lead, antimony, and plastic. That's it. So solar panels, it goes on and on. Your iPhone is antimony in that glass. So lots of different uses, but in the military it's very crucial in a lot of different applications.
You know, it's really interesting how it impacts our everyday lives, right? Things that we interact with, as you were just talking about. Now, U.S. Antimony just announced a new joint venture with America's Gold and Silver. Talk to us just about the partnership and what was the sort of strategic rationale behind this collaboration?
America's Gold and Silver is a silver mine, silver, copper, and antimony mine in Idaho. They have actually 3 mines around on this mountain. And they have historically taken their finished product, which is a sludge, to a processing facility up in Canada called Teck. And we get the antimony. We process our antimony. The problem is the middleman has been making all the money. And so we came up with a new process called hydromet, a process that we developed in Bolivia, took it to a commercial scale. We're bringing that technology to Idaho, probably be a $75 million project. We're basically 50-50 joint venture with America's Gold and Silver. So we're bringing the refining, they're bringing the supply. Since we've announced that joint venture, which has only been 2.5 weeks ago, we've also had 2 other companies say, hey, we want to bring you antimony because there's not enough refining of finished product in the United States. So we're really excited that we can take lower grade antimony that we couldn't take before in our gas-fired furnaces in this new process.
And why is it so important to build up that capacity here domestically in the United States?
Well, unfortunately, we've sat behind the log for about 25 years and let China go around the world and tie up all the antimony mines, tie up all the refining, drove the price of antimony down to a point that all the mines in the United States, all the refining went out of business. We're the only ones that survived, and that's why we're in the position we're in today. And so when September of 24 is when China said, no more antimony sales to any country in the world, including the United States, and that's when my phone rang off the hook from the Department of War saying, we need your antimony. So we won a $245 million contract, now $248, to supply these ingots to the military, which we're doing right now. And we also won another contract for $106 million for fire retardants for the military. So.
And quickly, Gary, in just a few seconds, what's the message you want investors to take away about the long-term strategy of U.S. Antimony?
Well, we have gone from an embryonic company. The company's old, it's been around 50 years, but when I took over 3 years ago, we only had a 20-cent share price and a 20 million market cap. Today, we're over 1.5 billion, an $11 plus share price. What happened during that period? We fixed the assets, we brought in new business, we've opened up 2 mines, mine in Montana and what we're doing in Alaska. We brought in shipments of antimony from 6 different countries. We built out our facilities so they can handle more product. And so we're trying to meet the demands of the United States, not only industrial demand, but the military demand. And as you can see, over the last 60 days, we're using up that stuff pretty quick. When you look at Venezuela, you look at Iran. So we anticipate this being a great business. We've also, at the urging of the Department of War, gone into tungsten. We announced 2 weeks ago a large tungsten discovery we have up in Canada. Tungsten also is not being mined in the United States or Canada. And guess what? China cut off all tungsten shipments September of 24 when they did antimony. So tungsten prices have skyrocketed. So we have cobalt, we have a cobalt play in Canada. So we're trying to do other critical minerals that are necessary for our country.
Well, Gary, congratulations on all the success. Congratulations on the bell ringing. Thank you so much for joining us on NYSE Live.
Thank you for having me today.
Kristen, there's a lot of excitement down here on the floor. I'll send it back up to you in the studio.
Lance, great to hear that interview with you live from the trading floor. And of course, Gary's going to be sitting down with Lance in our content studio a little bit later today for a deeper dive into this space. So stick with us on NYSE Content because you'll be hearing that podcast roll out in the next few weeks. And stay with us on our show, because up next, the Harlem Globetrotters are celebrating their 100th season. We'll hear from their president, Keith Dawkins, about what's next, including their push into gaming.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. The markets, of course, are open, and so is the celebration for the Harlem Globetrotters as they mark 100 years of basketball and entertainment. I want to send things back down to the trading floor where Lance Glenn is standing by with more. Lance, over to you.
Thank you, Kristen. Now, as the Harlem Globetrotters mark a century of basketball, they are partnering with Acclaim to bring their signature magic to gamers with Super Basketball Classic. And joining me now to talk about that venture and the centennial season is Harlem Globetrotters president Keith Dawkins. Keith, thanks so much for joining us. How are you doing?
I'm well. How are you?
I'm good. So, Keith, it is special that the game launches during the 100th season of the Harlem Globetrotters. How does Super Basketball Classic fit into the way you're celebrating really a century of basketball and entertainment?
Yeah, I think it celebrates it on two fronts. One, it's just about being where the audience is, right? So we take this magical tour that we have, some 250 tour dates around North America, another 150 tour dates around the rest of planet Earth. And it's a big, giant part of what we do, but in order to be around for another 100 years, we need to be all the places where the audience is. So gaming is, as we know, it's a multi-billion-dollar global industry. It's one of the places that we want to play with our audience, and we're excited about this. And then with Acclaim, it also celebrates our kind of rich history, right? As a kind of best-in-class partner who's been one of the groundbreakers in the gaming industry before it turned into what it is today. It's a great opportunity for us.
And so this title blends old school arcade basketball with obviously the Globetrotters signature style. We all know it well. We all love it. I certainly do myself. What makes this partnership with Acclaim just such a natural fit for the brand?
I think it speaks to what they were trying to achieve, right? And kind of celebrating their rich history and their, again, being groundbreaking in the gaming industry and kind of setting the standard, setting the bar, many years ago. And they wanted to do it with a property and an asset or intellectual property that spans multiple generations, right? The current generation today that is kind of a native digital gamer, and then the older set who maybe grew up on gaming, grew up on the Globetrotters, and that's a massive global audience.
And how important was it to really capture the nostalgia while still pushing the franchise forward for a new generation? Because you want to engage all fans, right? Those who have known the Globetrotters for a long time, those that are just coming into the Globetrotters. How important was it to blend everything that comes with the Harlem Globetrotters into this game?
Yeah, I think the nostalgia part, as some people call it, or it's just kind of who we are, right? We're like kind of comfort food for everyone of America. And you see it in a lot of other brands that have been around, have had staying power for 30, 40, 50, 60 years. They have a legacy to lean on. But that's not the thing that's going to make us last for another 100 years, right? So that's about how are we operating differently? How are we engaging a new consumer? How are we creating a rich environment for new commercial partners who want to reach audiences in a unique way and think that the Globetrotters can be a way to do that. So that's about our future state as well. And this partnerships like this will be a way for us to get there.
And quickly, Keith, in 15 seconds or less, just what does this 100th season hold for the Globetrotters? What can fans look forward to?
Fans can look for everything they expect out of the Globetrotters, you know, basketball, magic, wizardry, joy and hope and possibilities, great new uniforms with our uniform partners, Sprite is our new commercial partner, new tricks and things that we bring out on tour, and tell them to go to globetrotters.com and get some tickets for a tour stop near them.
That's Harlem Globetrotters President Keith Dawkins. Keith, thanks so much for joining us. Kristen, I'll send it back up to you in the studio.
Lance, thank you so much. Of course, wonderful to welcome the Harlem Globetrotters here to the New York Stock Exchange when we've seen them before. Well, we always do have a lot to celebrate here at the NYSE. That was true on Monday when we welcomed Paris Hilton for International Women's Day. Paris has emerged as an activist and entrepreneur through her company, 1111 Media. Its director of impact, Rebecca Groen, shared more about its mission.
Well, I think to start, women only first entered this trading room floor in 1967. And so not, in Gloria Steinem's generation, women started this work here. And so for us to be here today, to be focused on how we are investing in capital, how we're supporting women-owned small businesses is really monumental. And we're so honored that Gloria joined Paris.
Are you willing to give us a bit of an introduction to the genesis of 1111? What's it all about? And talk to me about some of your top priorities here in 2026.
Yeah, so 1111 Media is Paris Hilton's media company, and 1111 Media Impact is the nonprofit that's associated with the media company. And so we work to bring Paris's lived experience to light and turn pain into purpose for the causes that Paris cares about most.
I'm sorry, please, go ahead.
No, and so that's from everything from troubled teen industry to ADHD to supporting women-owned small business.
So it sounds like it's policy, it's philanthropy. What more do you most want people to know about? Not just what the work is, but the spirit of it and the motivations, why this is important both to Paris Hilton, but everyone else who's a part of the 1111 family as well.
Yeah, from the origins of Paris, our mission is really to just leave a sparkle everywhere she goes. And so we focus on strategic philanthropy, advocacy, and storytelling. And really, the mix of all three of those is what leads to our success.
And the Los Angeles region wildfires, I know, is something that you all have been facing head on. Break down the back in business pilot results from those wildfires. What should people know?
So we were in Los Angeles when the fires hit, and women-owned small businesses were uniquely facing big impacts with the disaster. And so Paris did a $1 million grant program with GoFundMe.org, and the success really speaks for itself. We provided $25,000 to 50 women-owned small businesses. 90% of those businesses today are thriving, and 80% of them are moms. And so our money didn't just impact one female entrepreneur, it impacted businesses, it impacted their employees and their families.
Yeah, what is the latest for kind of from those communities impacted? And I wonder the feedback that they are giving you, because we all remember the national headlines, but perhaps for some people it's been far too long since they really heard updates from the ground and really the community and the individuals who are most impacted.
Yeah, the headlines fade, but the recovery is still there. And so we're really proud that we're still continuing to support these women-owned businesses. We're continuing to provide capital. We're supporting them as a business ourselves and Paris personally. And we're also really telling their story, which I think is critically important so that we can continue to keep that headline and to keep them in the media. We're coming out with a new show today called Back in Business, which is a YouTube series that highlights 6 amazingly resilient small businesses. And we hope that it inspires and shows them that, recovery is possible and that you can turn your pain into purpose.
Rebecca, if people want to learn more about the YouTube series or the broader work of the impact and philanthropy, where can they go to find out more?
The YouTube series is on YouTube, and our grant program that's launching today is hosted on GoFundMe.
Well, 1111 Media Impact does work alongside GoFundMe to support female small business owners. And Amanda Brown-Learman, GoFundMe VP, walked through that connection. Let's take a look.
So GoFundMe.org was actually launched in 2017 with a mission to meet the needs of individuals and communities that have been impacted. And we do a lot of mobilization in the response just to raise a bunch of money and get it out as quickly as possible. And we had a great lesson last year when we actually mobilized in response to the LA wildfires, working with Paris Hilton and 1111 Media. She was actually a very early supporter of all of the individual relief granting that we did. And we at GoFundMe.org set this kind of like ambitious goal that, to be honest, we weren't totally sure we would be able to meet, but wanted to make sure that we got all of the money out as quickly as possible. We raised nearly $9 million and know how important fast cash is to people. And so when we were scheming and even dreaming about how to do that in a thoughtful, strategic way, we wanted to be able to support women. We wanted to be able to support the women-owned businesses that are the heartbeat of so many of these communities, just the anchors of like where people go and come together and give people a little bit of hope about that community being able to come back. And so we launched this idea to go support women businesses, found another partner with the Women's Business Center in Pasadena who helped us identify 50 women. And we're really excited about what we learned then to be able to now launch this nationwide fund and take it, scale it even more.
Yeah, and you mentioned the Pasadena women's business. Why is it so important to have those partnerships with local entities at the community level?
Yeah, definitely. They know what's best, right? Like, we're sitting in our offices, not necessarily in the heat of like wherever that disaster has taken place. And so we want to be deferential to the needs of that community. They are the experts. They are the ones that should be, deciding where the resources go. They know much better than we would ever know. And so empowering them to then empower their own community members, like that's such a key to the success. And I think so critical. And one of the things that just makes our sort of philosophy and approach really different. Like, we don't want to be super prescriptive about how the money is used, right? Like, if you have gone through something, I want you to be able to make the decisions about how that money should be used for your household, for your community, for your business. And the same is true here. We want to empower people, help them restore their own dignity in some of these like the darkest moments of their life. And so this partnership with them was just so critical to helping us find 50 incredible women and to be able to support their businesses.
I have less than a minute left, but GoFundMe, without a doubt, itself is a household name. But how does GoFundMe infrastructure ensure that all these donations are effectively deployed?
Yeah, so our goal is to get fast cash out to people, and we are able to do that in a low cost and just super effective manner because of the generous support that the business gives to GoFundMe.org. So GoFundMe.inc supports our operations and makes an annual contribution, and because of that support, we are able to make sure that every dollar that comes into one of our funds is a dollar out to the people who need it.
All right, thanks again to Rebecca and Amanda there for joining us on our afternoon show, Taking Stock on Monday. Well, before we have to let you go, let's take a quick look at markets. The S&P 500, little changed. Markets remain in a headline-driven environment, of course, based on what's happening in the Middle East, the ongoing conflict there, and the incoming data. So inflation this morning indicating it was in line with economists' expectations of 2.4% consumer prices from the same time a year ago. And the Fed will use that data at its rate decision next week. You can catch us on all the streaming services that you see on your screen right there. We're live each weekday morning at 9 a.m. Eastern here above the trading floor. Thank you so much for watching. We'll see you tomorrow.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?